Good morning, everybody. It is December 26, 2023, 8:46 a.m., and we are back after a very long Christmas break for another market open. We're here, folks. It is time to get back into the markets. We've had about 3 days since the markets have been closed. It was Friday, Saturday, 4 days. Friday, Saturday, Sunday, Monday, even though Friday I think was a half day. So it's been a while since we had our wonderful stock market come back alive. And now we are here. I have a 100-degree fever. I don't know how I got it. It's probably my sister, to be honest, because she was sick all weekend. And so this night, it was really last night, but this morning I woke up, checked my temperature, 100.4. I was like, well, that's not fun. I drank some tea in the morning, popped 2 Tylenol. You know what I'm talking about? Extra strength, 500 milligrams. You know what we had to do? And we got to put up a flu game performance. That's it. That's exactly what we got to do. So, yeah, I don't know. I think everyone's getting sick. I know a lot of people close to me are getting sick. Let me know if you got sick at all. I haven't gotten sick like this in a while. It's been a while since I got this sick. So we are here regardless. This is what I love doing, market open. If you guys remember during the weekend, we did a Christmas Eve special, went live for 3 hours. Even then, I kind of wasn't in the best situation because one of my eyes was swollen. Now the eyes are a lot better, but this right eye right here was swollen the whole time. That's why I had to wear these glasses. People thought I was being a dick, but like I actually just had to cover my eyes. So this whole weekend has been a kind of iffy from a health perspective. But regardless, I think we're here. And I think the easiest thing to wake you up in the morning is the market open. And so I said, you know what? We got to still do the market open because that's the most exciting. Marcus, Broccoli Bob, Invisible Voices, Sethi Roth, Jason, FDG, Bayray, Deefin, David, James Velez, Michael, Model Society, Felicia. Time to get back to business. Yes, ma'am. We are here. Johnny Mac, John, Natalie, Dan, Miami. Dan also says he's sick. Yeah, I think a lot of people are getting sick. Jager Flow, to the Colorblind Collector, EE, David, Wynn, Garcia, P. Morton, Decentralized, Freedom Fuels. Morning, everyone. Give the stream a like. Thank you, Nick Piercy, Lang, Ty Gordon. All right. So I think let's get into it. Holidays is a time to recharge. Oh, trust me. Yesterday I stayed in bed. Yesterday I started a new show. That's how much I was in bed. The new show is Billions. So I tweeted yesterday that I started Billions. I don't know if you guys have seen that show, but I started that show, and first 5-6 episodes got me hooked. Absolutely got me hooked. So I definitely recharged a little bit last night, kind of just staying in bed. The cool thing about Billions is that therapist, amazing actor. I love that woman. Wendy, that's her name. So good. I mean, she's such a good actor. First of all, she's beautiful. That helps a lot. But on top of that, her personality, character, the way she develops, like absolutely phenomenal character. I fell in love with that character. So we'll see how the show continues to progress. But I was so bad yesterday. I actually started a new, I don't watch shows. You gotta know this. And so I was stuck in bed, turned on Amazon Prime. I was like, you know what? Let's watch Billions. Let's see what happens. So nonetheless, I want to make some real billions, and I think that requires us opening the markets. Now, let's get into some macro news. This is the first thing I want to talk about. This is news broke this morning. I actually tweeted it at 4 a.m. I got to tweet one thing, and then I knocked back out to sleep. Because I was just like, oh, let me check if this is updated. And it was updated. So let's get into this first bit of macro news, and then we'll get into a ton of different other stuff going into the markets. So let me load this up right now. It's actually on the thumbnail of this pick, which is money market funds. So money market funds just came out, and here we go. They have decreased a consecutive week in a row as of December 21st, 2023. So total money market fund assets decreased by 16.09 billion to 5.87 trillion for the week ended Wednesday, December 20th. This was updated, I believe, this morning, even though it's from December 21st, 2023. Now, why does this matter? Well, this is what I tweeted on December 19th. On December 14th, total money market funds decreased by 11.55 billion to 5.89 trillion. left in these money market funds in the United States. Globally, it's about 8 trillion. And this was the first decrease in the past 12 months, because for the past 12 months, people have been putting money in these money market funds and not allocating that capital to the market. For the second week in a row, this is a very big deal. For the second week in a row, we are seeing another decrease. Why does this matter? Well, if we're seeing a decrease in the second week in a row, what that signals to me, as just someone who's trying to read and understand what's going on in the markets, is that the market or investors are trying to front run the Fed's rate cuts. They know the rate cuts are coming. They know that rate cuts are inevitable at this point, or at least they're making a hypothetical guess that more likely than not rate cuts are coming, which means if rate cuts are coming, and it's going to be more likely than not that 5% from a money market fund is going to be unlikely, then that money is likely going to stocks. So over the past couple of weeks, we've had $27 billion, 16 plus 11, $27 billion enter into or leave the money market funds. Now, the question becomes, where's that money going? And I think the reason we've seen the stock market continue to be propped up and, the S&P 500, but this was the last week of trading, by the way. The S&P 500, I think, is going to make a run at 4,800. 478 is the all-time high. We're at 474. I think we're going to make a run for 478 or potentially 4,800. A lot of that money, I think, is going into the equity market. It's either going into crypto, which, by the way, we have a lot to talk about in the context of crypto because a lot of interesting stuff happened over the weekend. It's either going to go to crypto or it's either going to go into cash. The problem is a money market fund is basically cash. So there's no reason for it to go to cash, right? Because you're just holding cash that gets 5%. So it's not going to Bank of America. It's not going to JP Morgan. It's not going to collect 0.01% interest. It's going to the stock market. Even if it's going to Apple and Google, it doesn't matter. It's going to stocks. That's my opinion. And so that second consecutive decrease on these money market funds, I think it's very likely for us to see just more and more momentum into the equity markets for a lot of different equities that are getting momentum. Another thing about these money market funds is that if they're trying to find alpha, the current alpha is in small caps. I think we all know this. This is not anything that is new. A lot of these companies that have, really not run for the past couple years, big tech, the alpha is not as likely to be there as some of these other companies. So maybe that money is going into the Russell. We don't know, but that money is definitely finding a home, and it's likely not finding a home collecting 5% in a money market fund. That is crazy to think about it, though, right? $16 billion last week left money markets. The week before that, $11 billion left. So we went from 6.01 trillion to 5.87 trillion. That number starts going to 5 trillion, 4.5 trillion, 3 trillion. You're talking about trillions of dollars leaving those money market funds. Where are they going? It's a very elementary form of analysis, but at the end of the day, it's like sometimes you don't have to overcomplicate it. That money's not going into crypto and it's not going into your savings account. It's going into the equity market. I mean, maybe it's going into crypto, right? But a lot of it's going into the equity markets, and that's going to be very beneficial for stocks. Let's check the US 10-year. 10-year yield right now. Wow. We're below 3.9, folks. Have we gotten this low before? Have we gotten this low? 3.9, 3.899. I know it's like barely below 3.9, but yeah, this is the lowest we've gotten. Wow. This is incredible. This is literally the lowest we've gotten, 3.899. Again, this is also good for the equity markets. More people buying up those 10-year treasury bonds. Yields come down in the bonds, more likely for equities to do better. Since if you're only getting 3.90 off the 10-year, maybe you can beat that with some returns in the broader markets. So, I mean, that's another good thing that we're seeing as well. Amit, did you watch Heat? No, I didn't get to watch Heat over the weekend. I did watch Scarface. I gave my opinion on Scarface over the weekend in that 3-hour live stream I had on Christmas Eve. I didn't like it. I'm not going to get into it. You guys, I don't want to justify it. The basic argument I'm going to make is that there was very little character development for Al Pacino. I mean, the character development should have been stronger, and it wasn't really there. I didn't like the ending of the movie where, spoiler alert, he gets shot and he dies. I'm like, I didn't like it, okay? I needed some more stimuli for me to get excited about it. I also watched Boiler Room. Boiler Room was a poor man's Wolf of Wall Street. And I know Wolf of Wall Street was probably inspired off of Boiler Room, but Boiler Room sucked, bro. It was just not exciting. It was just 2 hours and 50 minutes is just ridiculous. It's like, if you're going to make a 3-hour movie, at least make it exciting. So yeah, I've never I just didn't have the best opinion of a couple of those movies. Heat is the greatest movie ever made, period. All right, Ardashir. I watched the first 10 minutes of it, then I fell asleep. Granted, I was sleepy, so I gotta watch. I gotta give it a shot. You're not alone with telling me that Heat is one of the greatest movies ever made. So gonna have to check that out and give it a real shot. Ray, good morning. Thank you for being here. Okay, so yeah, we covered the equity markets, money market funds, seeing another decrease, 16.09 billion, 10 years at its lowest level. Here's some crypto news that we got to discuss because this happened over the weekend. And this was really weird when it happened. Like, it was just incredibly weird. Had no idea why it happened, but it did indeed happen. I have a friend who's loaded up the ass with this coin, and let's just say he made a decent amount of money. Well, I don't know if he sold, but he is sitting in some gains. Solana. Okay, let's talk about Solana. So Solana in the past 7 days has gone from 74 to 116. It's up 75%. In the past month, it's gone from 57 to 116. And if you look at the past year, it's up 900% from $11 to 116. For those that don't know what Solana is, this is a alternative cryptocurrency outside of Bitcoin and Ethereum. It was, I think it's one of the OG cryptos, but it was around in the last cycle and it peaked at 245. And it is essentially a coin for developers. It is a network for developers that run decentralized finance applications on top of it, which is a really important element of cryptocurrency. How can you run decentralized finance applications? A lot of people don't really like the Bitcoin network because it's slow. Solana is a lot faster. Yeah, there's a bunch of reasons for why people like Solana. Over the weekend, as you can see, this green thing right here, this went parabolic, right? So it got to the point where it was just like, it just kept going up. It would not stop. And, the bump just became pretty insane in terms of how high it was going. I think a lot of people are chasing Solana. And a lot of people were like, yo, Bitcoin's too expensive. Ethereum's too expensive. But $100 for a coin like this, it's worth it. And I can buy a lot more. And therefore I didn't buy, but I think I can imagine a lot of people saying they bought Solana. Now, the problem is this feels like a top for Solana because imagine Bitcoin got to 60,000 right now. Like, you would kind of feel like, all right, this is like, it's a little ridiculous. Solana is up 900% in a year. It's up 75% in a couple days. Like, you kind of are just like, all right, we got to chill out just a little bit in terms of how it's going. So I do know there's a lot of people that are shorting Solana right now because they just don't believe the price action that's happening right now. But it's also a lot of people that are thinking that Solana is, one of the prime cryptocurrencies for decentralized finance. Therefore, it's going to keep going higher. I have no clue. I don't know enough about Solana to really, really understand it. But I do know over the weekend, it just got stupid in terms of its price action and it went ballistic. Bitcoin right now at 42,714. Bitcoin was actually at 43,400. Over the past 7 days, Bitcoin is basically flat. 7 days ago it was 42.8. Right now it's 42.7. As you can see, since then we had a ton of, we broke 44 a couple times, but we couldn't stay above 44. In the past 1 month, it's up from 37 to 42. So that's really nice. Nice little gain. And if we look at the past 1 year, obviously it was at 16.9 around this time, December 2022. Now it's at 42. So nice little triple that we've had on Bitcoin since then. Bitcoin continuing to do well. All of the crypto mining companies continuing to do well. We'll see what happens this morning. I think some of them are down in the pre-markets, but the crypto mining stocks have had a phenomenal year. This is the last week of the markets being traded in December. So it is really important to see how this week ends because we want to make sure we don't give away a ton of gains that we got in this week in order for it to happen. I thought Solana was centralized. Honestly, I think all these cryptocurrencies are centralized, but you know what I mean? They're used to build decentralized applications, which is why they're decentralized or whatever. I don't even know what's centralized or decentralized at this point. All I know is that it's a currency that a lot of developers, like I have a bunch of friends who are developers, they love Solana. They can't get enough of this thing. And so when you hear from them, you're like, all right, well, you guys are the actual devs, so I trust your perspective. But the problem is, the broader markets reconcile that as a meaningful telltale for the best crypto assets that exist. Imagine the Bitcoin ETF gets disapproved. I'm coming to the conclusion that the amount of research I've done is letting me to believe that it's not getting disapproved. It'll be very unlikely to get disapproved. If it does happen, then I mean that's gonna Bitcoin's probably I think Bitcoin's gonna sell off dramatically if it gets disapproved, because then when is it gonna get approved? Like a couple of years from now? That means the entire hype cycle we've seen leading up into this ETF approval, if it takes years of extension, I think it's gonna take a long time. I think Bitcoin's gonna suffer. So it better not get disapproved for Bitcoin holders. But if it does, then yeah, we're in a tough situation. What I'm seeing is I don't think it's going to happen. I think the SEC just can't make the argument anymore. When you've got BlackRock pushing the argument, and BlackRock basically controls the whole world, it's hard to believe that Larry Fink is not going to get it passed. But if it doesn't, then yeah, I think Bitcoin's in a tough situation. Let's take a look at Dan Ives. Let's transition to Tesla. Tesla's been doing well over the past couple of weeks. Kathy Wood bought another 100,000 shares. Here's Dan Ives around why 2024 will be a golden year for good old Tesla. And then we'll listen to Tom Lee after this.
Tesla bull Dan Ives out with a new note saying Tesla will hit a $1 trillion market cap in the upcoming year. And he's raising his price target on the stock to 350 from
it was up from 310 to 350.
310. He is here in person. Dan, thank you. Appreciate it.
Great to be here.
A lot of people coming at you on social media about this price target. Even if they're saying, well, Tesla sucks, they're coming at you from a fundamental perspective, saying, I can't do the math and the earnings, the valuation. How do you get to 350?
Tesla is where Apple was in 2008, 2009. In terms of the sum of the parts and the software piece, this is just starting, what I view as the next phase of the Tesla growth story, hits starting in 2024. And at this point, from electric vehicles, they're doubling down where others are peeling back. I think units, I think margins actually start to increase. I think this is going to be a golden year for Tesla. At the end of the year, I expect them to be above $1 trillion.
Well, Gordon Johnson, obviously a bear on Tesla, and Gordon's a great guy. Comes on the show. He hasn't been right on it, but he might be at some point. We don't know. He says, he wrote on X, margins and earnings are imploding, global market share is down, and there's articles claiming that Tesla knowingly sold faulty vehicles.
Yeah, now look, to his points, what I would say here is that, first off, this is not an auto company. It's a disruptive technology company. That's why, from a valuation perspective, I think this is a stock that could be up 40, 50% in 2024 because people want a Tesla. Maybe they don't want an EV. They want a Tesla. As you
who said?
About.
Well, say who said that?
As the great Brian Sullivan.
Well, listen, it's funny. I actually talked to I met a car dealer. He watches the show. He came up to me. He owns a bunch of brands, and we started talking. And and basically he was like, "Yeah, I'm not selling them." I think people want Teslas. They don't want EVs because Tesla, if you've driven them all, and I have, Tesla's just a different experience. The dashboard looks different. The infotainment system is very different. It's just a different thing.
No doubt.
Than an electric powered Audi.
Well, and you're seeing Detroit peel back. You're seeing some of the European players. And that's why this was a poker move for the ages by Musk in terms of cutting prices, going after volumes. Now they're in a position of strength. And I believe this is just the next phase of the Tesla growth story where I don't think they stop at $1 trillion. I think there's just the middle innings.
So the one thing I think people hate about Dan Ives is that, the guy asked him, how do you get to a 300 or a $1 trillion valuation? Dan Ives didn't really answer the question, right? He doesn't go through the numbers. He just talks about the qualitative thesis around where Tesla is in the life cycle of it as a company. And I think that's the type of analyst he is. He's not that deep into like even the $25 price target. When we asked him about it, he didn't really have a good answer, right? A good answer meaning like he just didn't care about the numbers and the margins and all that stuff. He just, he has a thesis on it and he says this is the price target it could get to reach that thesis. I think the same thing with Tesla. I mean, if you try to get deep into the numbers and it's not as interesting of a conversation versus if you just talk about the broader role they could have in society and how the market will eventually reward them for that.
People love to hate on Tesla because I think they love to hate on Elon Musk. And I'll let people decide whatever they want out there, okay? Is Elon Musk hurt the company or help the company at this point? Because people don't realize Musk is not running Tesla. There is a management staff that's very quiet. They're not on Twitter. They just go about their job every day. But he's the face of it.
He's the golden
He created it. But there's a whole team actually running the company.
There's a team that runs it, but he is the hearts and lungs of Tesla. And that's from a brand perspective. as we've talked about, I still believe right now that's a contained issue relative to what's happening in Tesla. The irony is this quarter, we see a record quarter in China. So we're not actually seeing demand.
Even against BYD.
Even against BYD.
Which is the Chinese car company that's taken over China. I mean, and probably soon to come here.
Soon to come here. But in China, they've held their own. And I think this is going to be actually a record quarter from a China perspective. I think we go into this next year, margins increase, they gain share, and now full self-driving, I'd argue the AI piece could be $75 per share. And I think that's what we're going to be talking about 1-2 years from now.
What if it doesn't happen? What if full self-driving just regulators don't want it, insurance companies won't insure it, something occurs? I don't know. I hope it does, because you know what? I'll sit in the car and let it drive me to work while I do my work. But what if full self-driving never occurs?
If it never occurs, then Tesla just fundamentally, when you look at some of the parts, this is a stock that still has 30-40% upside. If full self-driving happens, which we believe as we get to level 4, and I believe they lead in that race over the next decade, then you could argue this is a stock that could go toward $2 trillion over the coming years because of disruptive tech. And going back to the Apple thesis in 08, 09 services, that's why Cupertino right now is a $3 trillion market. Many thought they never reach $1 trillion.
I think Dan Ives is pretty much correct on the thesis. I don't think he's necessarily wrong about it. The question is, when does this stuff materialize? So in the context of FSD, we still don't have a timeline for when that's going to happen. Hopefully, 2024 is that golden year for FSD to become commercialized. And then on top of that, you've also got Cybertruck, which Dan Ives didn't really talk about much. He's talking more so about comparing them to Apple in 2008, 2009. Is Tesla Apple in 2008, 2009? I mean, I don't think that's the worst comparison. The only difference between them is that during the time, I believe Apple in 2008, 2009 was not an $800 billion market cap. Yeah, 2008 Apple was $4 a share. I think Apple was closer to $200 to $300 billion market cap around that time. 2016, they were closer to $500 billion. Yes, they had definitely to be, because Warren Buffett bought them at $500 billion. So, I mean, that's the one thing I guess you could argue. Now, granted, a $500 billion versus $200 billion, 10 years later after inflation, they're not the same. That's for sure. But we do see Tesla's in that prime scenario to capture market share and really become the services play for people that own a vehicle for the next decade. The question simply becomes, is this valuation the best thing to be able to buy them at? And look, I mean, I think we could see Tesla come down from here. I think we could also see Tesla run up to 300. There's a reason why Kathy bought another 100,000 shares. I mean, we talked about this last week, but Kathy knows when to buy Tesla. It's one of those stocks where she fully understands Tesla, I think, better than most people on the street. And if she's buying Tesla, then I think she's pretty excited that, look, this is the time where it's finally going to run. It hasn't run for the past almost, 3 months. It's down 4% in the past 3 months. And because I think she was like, all right, well, now it's time. That's where we got into Tesla. What happens if FSD doesn't happen? Dan says it will happen. I think, look, FSD had to happen. If FSD does not happen, the stock is not going to maintain its multiples. It's just not possible. If investors lose faith that there is a SaaS business underlying the actual hardware, the actual car manufacturing business, then the company just doesn't get the multiple that it was getting before, even if their margins are better than every other, company's margins, automakers' margins on the planet. So FSD's got to work out. The question is just when. All right, here's Tom Lee speaking on Friday as well about where he thinks the market's going in 2024.
So pretty much everyone got it wrong, except for that guy. Fundstrat's Tom Lee, a.k.a. the Oracle of Optimism, a.k.a. the guy who got it right, a.k.a. Tom Lee, not the drummer. He predicted the S&P 500 would end the year at 4,750. That means that if the S&P, folks, falls just a tiny 5 points next week, we got 4 days of trading left in the year, Tom could literally be exactly right. Wouldn't that be?
Which is really hard. I mean, it's really hard to get an exact number. If he gets the exact number, that's that's pretty impressive.
He's something. So let's bring in Tom, who, you can smile. It's kind of the Tom Lee version of a smile, but You got it really right. And the basic question is how? What did you see that all these really nice, by the way, but really highly paid and really wrong strategists at the big houses got it wrong?
Hi, Brian. Thanks for that intro. I think there were two things that we were different from the street. The first is we didn't think inflation would take take a decade to defeat. I think many were bracing for 10 years of Fed fighting inflation so stocks would get stuck. And the second was because of the inverted yield curve, many were predicting a hard landing in 2023. Our view was that inflation was going to fall like a rock this year, and the Fed therefore could take its foot off the fight, and that economic resilience and the fact that companies were bracing for this storm of hikes actually could avoid a recession. And so I think that kept us optimistic, and that stocks would look like 1982 and rebound to all-time highs very quickly, which it looks like it's happened.
And that's not a crazy thing. I mean, if the whole street is thinking it's going to take 10 years to get rid of inflation, if you just are a little bit contrarian there and the data is really easy to become contrarian, that's not the hardest thing to do in the world. It's like, actually, no, inflation is going to be resolved within a year and a half. And if that's the case, then stocks are probably going to go higher.
So again, not to be little, but why did you think that inflation was going to drop? Because if that is the basis of your thesis, others also got that wrong. What did you see in the data that made you think when things were just cooking inflation-wise at the beginning of the year that they would slow down?
Well, Brian, it's a little. What our team did was we rejiggered inflation and identified that 86% of all this rise in core inflation was coming from housing and cars, including the fact that super core was rising. Almost all that was auto insurance, auto repair, auto leasing. So we realized that this was all just following goods pricing, that car prices were set to fall, and that would pull down inflation. It looks like that's kicking in now, and that housing just needed to get towards a 3 to 4% annualized rate, and that would get you back to where you need to be to get to 2% core inflation. So our view was, it's not about travel and it's not about health insurance. It's really about cars and housing getting back to normal. And that's the trajectory we've been seeing. I think the market's recognizing that view, but we spent most of the last 18 months arguing that view.
What are you looking at for next year, Tom?
I think it's going to feel like a lot of tailwinds coming together, because we know the Fed is going to be supportive, managing the business cycle instead of fighting inflation. And we've identified reasons for capital spending to pick up next year, including that huge gap between soft and hard data. And that should lead to EPS surprise. And then mortgage rates, we think, could drop towards low fives, maybe even fours next year. And that would be stimulative to the consumer. So to me,
by the way, in the context of mortgage rates, we're at 6.18%, and about 453,000 is the average home price, which is down significantly, which is really good for demand when it comes to mortgages.
It feels like it could be an early cycle year that really benefits financials and small caps.
But you don't see the S&P 500 gaining another 20%, do you?
It's possible, but that's not our base case. We think it's going to gain at least 10% towards 5,200, but it probably means you first consolidate a lot of this parabolic rise in the first half. So maybe we fall to 4,300, but then we rally pretty hard into 5,200 by year end.
But you think that small caps could outperform the large caps next year? Did I hear you right?
That's right. Yeah, I think small caps might even just rise every month next year, because on a price to book basis, they're back to 1999 levels relative to the S&P. And that was a launch point where small caps outperformed for 12 consecutive years. So I think we're entering a period where small caps and market breadth are going to expand. And that's going to be good for stock pickers, because they can buy companies they like, and you're going to have a decent earnings backdrop as well.
Yeah, there's a lot of companies out there, and we're not allowed to own individual companies. I can own index funds and ETFs and mutual funds. That's pretty much about it. But when I look at some of
dude, that's the one reason I would hate to be a CNBC analyst. Like, if I couldn't own stocks, I feel like I like stock picking too much to have to be on CNBC and not be able to do that.
These screeners that I'll do just on because I'm bored and I'm boring. I'm like, man, there's a lot of seemingly really good growth companies that are trading at like 4 times earnings in small caps.
That's
completely
right.
Just left on the trash heap.
That's right. I mean, the money's been equities have been starved of inflows. Retail investors pulled money out of stocks this year. And in fact, the S&P X FANG is trading at 15 times forward earnings. I mean, that itself is a pretty reasonable multiple. But then when you look at the S&P 600, which is the small cap index, you're at 12 times. So you're absolutely right. Small caps are pretty attractive.
Okay. First of all, thank you everybody for being here. Please excuse my voice for being bad today. I have a 100-degree fever, but I'm still here because we got to open up the markets. I have a lot of like mucus just stuck in my throat, so I'm trying to not have it show up when I talk, but it's a little hard. That's what she said. Okay, so we are here now. The core point that Tom Lee was trying to make there is that there are a lot of tailwinds setting up for the macroeconomic environment. There's two things that I think he talked about that were really interesting. Number one, money market funds. If you are just joining the live stream, we have the top headline of the day. Let me share the picture as well. Money market funds have shown a second week of consecutive decreases. This week, we lost $16 billion from money market funds. That means people took out that money from money market funds. And this is following an $11 billion decline just a week ago on December 14th, December 21st. $16 billion has come down, which means $27 billion have left money market funds. We went from $6 trillion to about $5.87 trillion now in those money markets. That money is coming back most likely into the equity markets. That's one of the core things Tom Lee was talking about in regards to a tailwind for the market. Another tailwind he's talking about is mortgage rates. So if you've been keeping up with the mortgage rates have gone down from 8% where they topped to 6.18. I think that's going to come down to at least 5% by mid-year. Now, it's going to be hard to get it down to the 4.5 range and definitely the 3.5 where my parents got their house. A lot of people who bought a house in 2020 got that rate. But I think 5% is reasonable if it's at 6.18. On top of that, mortgage applications have started to go up, which is leading towards a balance of supply and demand that we haven't seen in a long time. And house prices are actually starting to go down into that mid $400,000 range. That continues to do what it needs to do. We're going to have a booming housing cycle going into 2024. We're going to have people actually having ownership over their houses, having reasonable rates that they finance their mortgages in. We're going to have money coming from those money market funds back into the equity markets. There's just going to be a lot more liquidity that we didn't expect to have that is going to start to happen as we're recovering from this inflation downturn, which is going to be really, really good, I think, at the end of the day, for the equity markets. 10-year right now, 3.904. We were just at 3.89. We got 12 minutes until the market opens. Let's take a look at some of these how some of these equities are doing. But in general, that's Tom Lee's point, is that there are a lot of institutional and macro tailwinds that are going to lead to people buying stocks at the end of the day. And it's one of those things where you got to keep an eye on it, even if he believes the S&P could fall 10% in the first half of the year. So we could have a choppy first half, 4,800 to 4,300. People could think that, things are in a bad situation. And then things just come right back up to 5,200 to end the year. What would be good small cap stocks to look at? If you go to the IWM Russell and just look at the stocks that are in that Russell, in that ETF, there's a lot of them. I know SMCI is in there. There's a couple of other them that I'm forgetting right now that are in the ETF. So if you just type in IWM ETF stocks and you just look in those stocks, it'll give you a bunch of names. In terms of an actual small cap that I think is worth buying, I don't know. It's because the thing about small caps is that a lot of them are unprofitable. A lot of them don't really, it's hard to assess if their business is that viable because they're a small cap for a reason, right? They haven't been able to find massive product market fit into the public sector. For example, a small cap to me is Robinhood. Now, Robinhood is a $12 billion company. A lot of people say a small cap is under $1 billion. So maybe Robinhood's a mid cap. But to me, the due diligence I've done on Robinhood leads me to believe that it's a relatively small company in regards to its market cap compared to all the other big names. And there's a real business model underneath it. SoFi is also a quote unquote small cap, in my opinion, at a $9 billion market cap. Now I know a lot of companies in the Russell are like companies that are literally $2 to $3 billion. So there's different, avenues towards it. But in general, if you buy a small cap, you just have to be you have to make sure, even if it's unprofitable, that they're on the right track and that there is something to be gained from that small cap versus it just being a company that's undervalued, because you don't really know what undervalued is, even if Tom Lee thinks small caps are going to go up. Some of the equities, we have Enphase right now, 135 in the pre-market. We've got Roblox, 46 in the pre-market. Robinhood, 1304 in the pre-market. SoFi, 982 in the pre-market. SoFi up 1%. Robinhood up almost 1%, up 0.70%. All the Bitcoin stocks are down. So CleanSpark is down about 2%. And that's because Bitcoin is down over the past couple of days. Riot is down 2%. Marathon is down 2%. Coinbase hit 175 last week. Absolutely insane. Coinbase is down 0.89%. I was going through Coinbase's Q3 earnings. They made $2.5 billion in revenue off crypto trading back in Q2 2021. It was pretty insane, just the amount of transaction revenue these guys made off of crypto trading when crypto was at all-time high. This is why I think the market's buying Coinbase, because Coinbase's numbers, they did $623 million last quarter. I think there's no way they don't do less than $1 billion. I think they're putting up $1 billion transaction revenue quarter, which is going to be amazing growth quarter over quarter. Because like it's just there's like Solana, for example. There's no places you can really buy Solana outside of Coinbase. You can't buy it on Robinhood. I wish Robinhood, but the SEC doesn't allow Robinhood to list Solana. I don't know how the SEC allows Coinbase to list Solana, but regardless, all that juicy Solana revenue, Solana was up like 40% in the past 2 days. All of that, I would say 99% of that was happening on Coinbase. So Coinbase's revenue is going to absolutely crush Q4. And it's just, if you go back to 2021 and look at some of their numbers, it's just insane in terms of how they operate. Chris says Wire in the chat for another small cap. Encore Wire. Okay, I have to look at this one. This is 214. Market cap is 3.3 billion. Price of sales is 1.4. Okay, so that's one for those that were needed a small cap idea. Wire is a company to look at. If we go to Max, this company has been around since 1992. Okay, it's been around for a while. And in 2020 it was $48. Now it's $221. So basically 5x in the past 3 years. Maybe something to look into when it comes to this company as well. Big tech is green this morning. We got Google finally breaking out into the 140s. Google now 143, which is awesome. Apple, let's see, Apple is green, 193. Microsoft, let's see, Microsoft is green, 375. Meta hit a 52-week high on Friday at 357. Right now at 354, it is green as well. And then Amazon, I think, is above 150. Amazon, 153. So a lot of the money market funds that we talked about that are leaving the money markets, I think a lot of them might be just going to a flight to safety, which is in the big seven, which is fine, because even if the big seven continue to get propped up, it gives more room for other investors to find alpha in different equities like small caps. And that just constantly creates a cycle in which more money continues to enter into different equities. And a lot of those might be the beneficiary of small caps if big tech, continues to form a base. So I think it's really nice that we're seeing a lot of momentum here and big tech continues to be green. And we're not really seeing that rotation out of it yet. What else do we have? Is Robinhood still a buy? I would say so. The problem is there's not that much of a margin of safety that you had on Robinhood versus if you bought it at $10. So I think the problem with Robinhood now is that it could definitely fall back to 10 if crypto tanks. Do I see that happening? Not really, but could it happen? Yes. Do I see it going back to 8? No. I think 7 and 8 is kind of done. $10 absolutely could happen again if crypto tanks. Like crypto gets to like 35,000. Yeah, I keep saying crypto, but Bitcoin, you know what I mean? In general, I think the street has figured out that this company is ridiculously undervalued and that they're going to crush their Q4 numbers. And so because I think the street figured it out and I think there's a real business outside of the crypto element towards it, it's going to be fine. So I think it's still a buy. I would just be really patient with your DCA because it could fall right back down to low 11s. Again, low 11 is where I would really load up the boat. 10, I think is going to be harder to get. 12 could fall to 12 today. Low 11s is where you want a real dip, which we saw 4 days ago. We saw low 11s, and I know a lot of people bought that dip that day, and it was a good dip buy. Affirm at 49.65. Holiday season, that might be another catalyst for Affirm. The reason buy now, pay later was so big back in Black Friday was because people, they could literally buy now, pay later. One thing with their Walmart partnership is that people were saying that Affirm now you can do buy now, pay later on groceries, which doesn't seem the healthiest for people to have to do buy now, pay later on groceries. Like if you have to do buy now, pay later on groceries, it says something about the American consumer that we're in a tough situation. Now, hopefully most people are using it on like a laptop or a flat screen TV or whatever they're buying. But buy now, pay later on groceries means that people are in a tough situation, which might end up showing cracks in the economy in the next couple months if that happens. So hopefully that's not as bad as it seems. Snapchat at $17. Truist, $36.97 in the pre-markets. Truist, a nice big bump. Let's check out KRE, the regional banking ETF. We got 4 minutes until the market opens, folks. Up 0.49%. So Truist trying to close in on $37 as we get into the market open. This is the final week of trading for 2023, which is pretty insane, dude. Final week of trading for 2023. It's been a hell of a year. And we are now at the end of that year. Who would have thought Meta would be 354? You know, when Meta was $90 in January. I mean, who would have thought CleanSpark would be $11 when it was $2 in January? I mean, the year we've had has just been incredible. S&P trying to close it on 475. I wanted to get to 475 just so Tom Lee is right at the end of the year. I literally wanted to close exactly at 475 because then Tom Lee would be like completely correct, which would be just hilarious. But man, it's been amazing. KT Richardson says, Palantir has caused my portfolio to lag the past 2 weeks. Everything else is going up. I think if you own Palantir or Tesla, you are lagging in your portfolio. And I say this as someone who owns both of them because these two stocks have not participated in the rally. And again, you know, I've been saying this over the past couple of weeks, but the reason for this is because Palantir is up a lot year to date. Tesla also up a decent amount year to date. Both of them up triple digits. Even big tech is not up triple digits outside of Nvidia. All the other guys are up like 50 to 70%. So, you know, both of them got so decimated at the lows. Tesla at 100, Palantir at 6, that they rebounded so nicely that I think you kind of got to sit back and just enjoy the gains. On a technical level, there is a lot of room for Palantir to fall back to $15.40. That's where there's a massive gap waiting for Palantir. And I promise this year I'm going to get better at technical analysis so I can actually show you guys this stuff. I'm learning it, you know, every single day, trying to understand this stuff a little bit more. I would say by like March, I'm going to have a pretty decent understanding of this stuff. I need to take a good 2 months and just like actually study it every day. So I'll be able to do better tech TA, which is men's astrology basically, by March. But from what I'm seeing, there's a gap at 1540 and that I would very welcome. I mean, look, I know a lot of people would hate it, but if you're a long-term Palantir shareholder, I know you'd be very happy. If we get 1540, I'd be very, very happy. Don't think that's going to happen, but if it does happen, that'd be awesome. And then we've got Tesla, obviously 254. Tesla also, you know, fell from 299 after their July Q2 earnings, and it's been kind of stuck ever since. So Tesla and Palantir haven't moved. I think they will move in 2024, but they both need their catalysts. Tesla, obviously, Cybertruck. Palantir just needs increased growth rates, S&P 500, Titan contracts, a lot of different catalysts to look forward. But towards the end of the year, you know, there hasn't been much catalyst. You know, Blake makes a good point. Tesla is at the same valuation that it was at 2 years ago in 2020, October 2020. So almost 3 years ago, really, even though revenue has tripled. So this is why valuation matters, right? This is why timing does matter when you're entering into a position. Because you could have bought Tesla at $250 October 2020 and been like, well, I know they're going to, you know, go to the moon. And then, you know, you're sitting at the same price if you did not sell when it hit 414, which was their top, which is like $1.1 trillion was the valuation. So, you know, that's what we're seeing right now. And ultimately, those catalysts are going to have to allow it to continue to grow more into the future. The gap on the day chart for Palantir is down to $14.94. Yeah, that $15 level. Look, I don't know if it's going to happen, but if it does happen, on top of that, Phillips says 17.1 is support for Palantir. He's absolutely correct on that. So either, you know, we sell off deeply into that $14, $15 range, or we have support at 17. All right, folks, December 26, 2023, 9:30 a.m. The stock market to start off the last trading week of December is once again open. Wake your ass up. Here we go. 100-degree fever, but you know we got to open up the markets because that's the way to cure a cold. Unless we have a massive red day, then the cold's just going to get worse. Hopefully not. Tesla 254 opens up 0.88%. Even if we do have a red day, the good thing is the market is back after a 4-day hiatus, and it's time to open it up and see what we've got going on. Palantir 1743 down up 0.10%. KRE up 52.42, up 0.02%. Robinhood $12.98, falling just below $13, but up 0.23% on the day. Amazon $153, Meta $355, Microsoft $375, Apple $193, Google $143. Green. We're seeing a ton of green across the big tech names. Not doing that bad. So we're seeing green over there. Coinbase 174, that's down a little bit, but Coinbase hit 178 last week. So really nice price action for Coinbase. SoFi 979, up 0.8% on the day. Enphase 134.77, up 0.58%. Unity Software, wow, look at that. Unity's at $40. Unity was at 22 a couple of weeks ago. Now Unity's at $40. Nvidia 491. Nvidia keeps trying to flirt with 500, but it just can't get there. It gets stuck at this 480, 490 range. So we'll see if by the end of the year it can inch up to that level. But right now at 491, S&P 500 474, ARK Innovation 53.21. ARK is up 45% year to date. So ARK investors have had a good year. If you got it on the bottom, maybe you're just recovering on ARK. I know some people still have averages around like $80 on ARK. So ARK is in a little bit of a tough position, but had a good year at least to recover. Rocket Labs 572, up another 5%. They got a $515 million contract last Friday. That sent the stock up about 20%, up another 5% on the day. So the street obviously likes that contract and was excited for them to get that. Netflix 488, Elf Beauty 144, Uber 61, Instacart at 23.90. This one IPO'd at 31, so this one's down. Snowflake is 194, that's red. Disney's 90, that's red. Duolingo 237, that's red. Google hits 52-week highs, 143.32. Look at that. Not bad. Google's getting some momentum. Google finally showing some signs of life. Not bad at all. So we're seeing Google go green. Palantir turns red as we open the day. 1738. It's going to be a fight on Palantir for that 1710 level. It's going to be a real fight to see if they can hold that 17 level. Because, the chart is screaming $15. So if we get it, we get it. But if not, we're going to see if it goes there. Gilf Magic says, you think we see any short squeezes with the market continuing to recover? I think, there are definitely potential candidates for short squeezes. SoFi is the one that rings a bell to me because it's 16% of the float is sold short. So from that perspective, I would think that, they could definitely get it. The problem is, I don't know if there's enough, juice for the shorts to not double down at this level. Robinhood right now, 1307, breaking through that $13 level. SoFi 986, up 1.64%. I think the shorts either double down at this level or they cover. And part of me thinks they're going to double down. They're not going to cover right now because I think they see this move largely in line with Jerome Powell's pivot, not anything fundamental about the company, which is right. I mean, SoFi was $6 3 weeks ago, and then Jerome Powell pivoted, and then it, spiced up to $10. So SoFi would be my candidate. If it just keeps running, I think the shorts will get squeezed, but it has to really run in order for that to continue to, be at the level where it needs to get to. SoFi right now, 990. Look at that, 992. It's aiming for $10 on the day, up 2%, trying to get to that $10 range. Robinhood, 1306. Robinhood trying to break through 13 and actually maintain some momentum above that $13 range. Yeah, let's see. Let's see if these guys can actually have Robinhood above 13, SoFi above 10. Palantir up a little bit, 1750, up 0.4%. Google 143, Tesla 254. Again, we saw Cathie Wood buy 111,000 shares of Tesla back last week. Square 77. Square continues to do well. I mean, again, Square with that $39. It bottomed at. So now Square at $77. That's amazing as well. My prediction: Intel is going to hit $80. That's a hell of a prediction because Intel has not hit above 50 in a long time. Intel, let me look at has Intel ever got into $80? Intel's max was 63 back in 2021. So Intel at 80 would be higher than where they were at the bubble, which is going to be tough. But Intel was at 23. I mean, look, at 23, that was probably stupid. All of us should have bought some Intel at 23. I didn't think of it as seriously as I probably looked at, as I probably should have. But at 23, Intel just got stupid back in October of 2022. And we got a nice little rebound up to $48. Intel is still an incredibly important company in the United States, globally, $205 billion market cap. Just not a growth company anymore, right? That's the only difference between them and some of the other semiconductor chip companies. Teladoc at 2154. Remember we were talking about Teladoc at $17 1.5 billion in debt, 1 billion in cash. So 66% of their debt is in cash. We were talking about the company. They just need to do some share buybacks. Their float is only 160 million shares. I don't know if Teladoc is one of those small caps. I would, so people were saying what small caps are out there. Teladoc was $150 at one point. It's at $21, $3.56 billion market cap. Highest position in ARKG. It was at $15 at the bottom. Now it's at 21. This is a company I could see running if we have IWM, hit 300 in the next couple of months. But I don't know enough about the company. I need to do more due diligence on it. But from a valuation perspective, Teladoc does look a bit more undervalued. I think they're doing $2.4 billion in revenue, and their market cap at the time was $2.6 billion. Now it's $3.56 billion. So definitely one of those plays that was a little bit left for dead ever since it fell. JP Morgan 167, Bank of America 33.49. Bank of America is doing really well. Bank of America went from 24 to 33. Berkshire Hathaway is just collecting those nice dividends on Bank of America and some capital appreciation. Google at 142, Lucid at $4.38. Lucid somehow, continuing to do well in some capacity. But Lucid going a little bit green as well. Where's AMD? Because AMD had a hell of a month. Where's AMD? Wow. AMD's at 140. Wow. Oh my. AMD's at 140. The RSI on AMD is not even that bad either at 61. AMD was at 118, I think a month ago. So that's not too bad to see AMD at 140 now. That's actually pretty incredible, quite frankly. Wow, did not expect that. AMD at 140. AMD's top was 167 back in 2021, I believe. NVIDIA at 493 on the day as well. Robin at 1305 right now. Not bad, folks. December 26th, it is a green day. It is a green day for the equity markets. We are seeing green, and we are seeing green going into the last week of the trading year. Let's get an update from Dallas Fed president on interest rates and a potential. Well, actually, no, let's do this. Let's do Bitcoin, then we'll do Dallas Fed president. So, and then we'll do the options market because we've seen a lot of different options volatility. Here's Anthony Scaramucci on why Bitcoin is going to surpass its all-time high. We were talking about Bitcoin just about 20 minutes ago. Let's get an update on where the crypto markets are going, and then we'll check in on Bitcoin and Solana, which had a monster move over the weekend.
Could the approval of a Bitcoin ETF, we get it, ever, turbocharge Bitcoin and other crypto, maybe like Solana, in the new year? Let's bring in Anthony Scaramucci on this, the founder of Skybridge Capital, noted crypto investor as well. How shocked, if I had to have, with everything else that has gone on with crypto, okay, with all the problems, this Bankman-Fried character, a bunch of other things, and someone said, but Bitcoin's going to go up 160%, I would have said, what is in your eggnog, because I want some?
Yeah, listen, I mean, it's very hard to understand.
Dude, Anthony didn't even smile at that joke. I feel so bad. He tried to make it. There was no response to that joke. That was bad.
Why it went up that rapidly for the persons that are not studying Bitcoin. But if you step back and look at the 14 years of Bitcoin, or now almost 15, it is easier to understand for those people. And I've been in Bitcoin since 2020. And so, yes, I see why that happened. And probably, since you mentioned Sam and some of the other nefarious actors, they probably pushed it down too far at the end of last year, Brian.
Yeah, because I do also want to remind our viewers that may not be crypto investors or follow it every day, Bitcoin was at 60,000. So we've had a hell of a run this year. It's been great, but we're still well off our highs. Do you think next year, or if we ever get a Bitcoin ETF, that high can be breached?
So I've been embarrassed by my predictions in the past. I thought it would have gotten to 100,000 by the end of 2022. If you recall, in November of 2021, we got the Bitcoin futures ETF, Brian.
Mm-hmm.
And so I thought that was going to come. I filed, Skybridge filed, not me, but the firm filed for a cash Bitcoin ETF. It was rejected alongside of Fidelity and many other players. We'd elected not to do that now because of the competition. So a lot of this stuff got dragged out because of the regulation. But if you're asking the question, will Bitcoin get through its all-time high? I believe it will. I don't know when. There could be some
selling pressure, sort of that whole buy on the rumor, sell on the news in the beginning part of the quarter. But if you're asking by year end, hopefully you'll invite me back. I think we'll be through the all-time high. But I've been embarrassed by my predictions before, so I'm a little hesitant now, a little gun shy, a little humbled.
It is kind of funny when he was like, I've been in Bitcoin since 2020. It's like, dude, that's when everyone got into Bitcoin. So, it is what it is. But nonetheless, I think his argument makes sense at the end of the day that, you can make predictions, but those predictions could lose. And you can be humbled by those predictions since it's Bitcoin. It's very volatile. Nonetheless, if that ETF approval comes, then maybe we're in a good spot.
Well, listen, you and everybody else. I mean, you heard the top of the show probably that Anthony, that pretty much every big name on Wall Street whiffed on the year for stocks. Do you just invest in Bitcoin? Because we're seeing a lot of enthusiasm around, still, again, altcoins are back. We talked about Solana. It's up 400%. You've got Ethereum. You got some of these other coins that are really getting hot. Makes me a little nervous, right? Because a lot of momentum, probably a lot of retail money here. Do you invest in any of these altcoins?
Yeah, well, I'm still doing, when we met back in 2009, I'm still doing the same thing. We have a broad hedge fund of funds portfolio that's up about 25% this year. Our Bitcoin exposure obviously up 160. We have a ETF called Crypt, CRPT, which is up over 200%. So about a third of our business is in cryptocurrency. But you mentioned some of the names that we own. We do have exposure to things like Solana, Ethereum. We own something called Vulcan Forge, which is a very small video gaming company. But Algorand is another name that we own a lot of. And so we do have some of the, what we would call the altcoins. But the big kahuna in the room is Bitcoin. I have something called Casper Laboratories. I mean, those are just some of the names that we have. But I think you're asking a broader point. Do we invest outside of Bitcoin into other Web3 tokens? And the answer is yes, but the preponderance of our money is in Bitcoin.
All right, so that's the update on Bitcoin. I think it is more likely than not that we're going to see this ETF approval from what I'm reading, but I will keep updating you guys on if I think something's going across, if that's not what it looks like. But it does seem like this ETF approval is happening, and when that does happen, it's either going to be a dud, it's going to be a sell the news, or it's going to be, holy crap, there's so much more exposure to Bitcoin, and now the market is going to give it some more momentum because everyone has a chance to buy into it. Here, let's get another update on interest rate cuts in 2024. Everyone thinks it's happening in March. I disagree. Let's hear an update on if we are actually getting some interest rate cuts in March.
Now about with Kevin Mon, President and Chief Investment Officer of Henyon and Walsh Asset Management. Good morning, Kevin.
Good morning, sir.
Okay, so let's talk about how far we've come and how fast. Is it too far, too fast, or is the market ahead of itself in overestimating how much relief is coming from the Fed, or does it have it right?
The markets rallied significantly in November as investors came to the belief that we've reached the end of this rate hike cycle. That belief was only validated in December once Chair Powell all but confirmed that, yes, we're at the end of this rate hike cycle. And we continue to see the markets move a little bit higher. I believe a large part of that is FOMO, fear of missing out on the next leg up of this market rally. However, I do believe that markets have rallied too high, too fast. And some of those gains that we were expecting in 2024 have likely now been pulled forward into 2023, which creates the potential for more market volatility during the early stages of 2024, when this long-awaited economic slowdown finally materializes and investors start to realize the potential pains of an economic slowdown, which will ultimately lead to the Fed cutting rates towards the second half of next year.
So how important is it for this level of the market that the Fed deliver the rate cuts on time as the market anticipates in March? What if March comes and goes and the Fed says, no, you had that wrong?
This is a good question because like 75% of analysts are saying that it's going to happen in March. So if it doesn't happen in March, there is an argument that like the market just takes that in a horrible direction.
I believe the Fed isn't going to cut in March. I'm in the contrarian camp, I guess now. I believe they're likely to cut towards the end of the second quarter, but the market is expecting rate cuts to the tune of somewhere between 1% and 1.25%. The Fed's dot plot told us that it's going to be around 75 basis points next year. But if the forecast for an economic slowdown do come to fruition, and as it stands right now, the Fed is forecasting GDP growth to slow to 1.4% next year and stay below 2% in 2025. You know as well as I do, the Fed doesn't cut rates when the economy is doing well. They cut rates when the economy isn't doing well. So I believe that those rate cuts need to take place towards the second half of the year. And if they don't, that will catch the market by surprise and lead to a pullback.
So is that pullback, in your opinion, a buying opportunity?
I do believe that would be a buying opportunity. Ultimately, the Fed is going to have to cut rates. Their hand is going to be forced by the extent of this economic slowdown. Remembering, of course, if they keep rates too high for too long, that puts more pressure on the U.S. consumer that accounts for 70% of our economic growth and now has over $1 trillion on their credit cards, facing credit card interest rates above 24%, which is the highest on record according to LendingTree. So they're going to have to ease. That creates the buying opportunity in both stocks and bonds. And I would argue create a rally of the rest beyond just those magnificent 7 stocks that rallied in 2020.
Yeah, let's talk about that, Kevin. How would you position yourself for what you believe to be the broadening of the market? One idea that I've heard is going into a balanced S&P rather than the cap-weighted S&P. What are some of your thoughts on that?
Certainly. You can even look at the NASDAQ 100 index as a guide for what worked in 2023, didn't work in 2022, and is likely to work in 2024. That's actually equally weighting those magnificent stocks that are within the NASDAQ 100 and likely to provide growth to the U.S. economy, but probably trading at too excessive of valuations.
And this is why, again, Tom Lee thinks that there's going to be market movement in some of the small cap names, because the big ones, they're going to move the economy forward, but they've just run so dramatically that it's going to be hard for investors to continue to buy into them, looking for gains versus looking for safety. A couple of headlines I want to get through as well. Thank you, 676 people, for being here. We are here on the market open December 26th, last week of trading for this year. We'll be ending it out this Friday. So some headlines. Oil prices are still $75 a barrel, WTI crude. So this is a 2.5% gain in the previous week. This is a little bit below $80, so that's good. The Red Sea crisis is still a crisis. Nothing has really changed from there. Nothing has gotten that much worse. Nothing has gotten that much better. So we'll keep you updated on that. But so far, that crisis still remains the way it is. Singapore has their lowest inflation rate in 25 months. So Singapore's annual inflation rate dropped to 3.6% in November of 2023. It was 4.7% in the previous month of October. It was the lowest reading since October 2021, which is really good for global equity markets. We're seeing other countries figure out how to get their headline inflation come down, which is a good thing, because in general, you want inflation all across the world to start coming down a bit, because it helps imports, exports, etc. Food prices rose by about 4% the year over year, the least in 20 months, after a 4.1% growth in October. And housing and utilities was 3.8% versus 3.9% back in Singapore. One of the other interesting things about Singapore, because I have a couple of friends who live in Singapore, shout out to Jing Kai, who's in the chat from Singapore, is that Singapore is so clean and so like restrictive with pollution. To buy a car costs like $100,000. Like, you can't have a car. They don't want people to have cars. So they really limit ownership. You have to be very rich, or you have to be like, you have to know a guy that can get you the permit for the car. So Singapore is one of those places where they really want the culture to be more insulated within itself, and not have everyone, driving around in cars and doing all the pollution and stuff. So seeing their inflation come down is a really good thing in the broader scheme for their country continue to expand. Another headline is Spain. Spain producer prices, so basically the PPI in the United States for Spain, this fell to the lowest in 6 months. Producer prices in Spain fell by 7.4% from a year earlier in November 2023, easing a downward revision from 7.7% in the previous month. It is the 9th consecutive month of producer deflation, but the softest since May, as prices decreased less for energy, which was negative 23% versus 23.4%. Additionally, prices slowed for consumer goods, 7.2 versus 8%, and capital goods, 2.5 versus 2.6. Again, producer prices fall down. That means consumers have to pay less because producers are paying less to create the products that they're making, which is overall good for inflation across the entire world. So yeah, Jing agrees with me on what's going on in Singapore. So it is not the easiest thing in the world for you to get a card there. Singapore exports all their pollution to Malaysia. Well, I don't know about that, but maybe. I know Singapore and Malaysia always have had a little fun rivalry with each other. My uncle actually lived in both places. But Singapore is a very, very clean place, and like the government really tries to make sure that they keep it clean, and that involves people not owning cars. It's definitely not like America where you can just buy a car from your local dealership and no one cares. Singapore is a lot more restrictive from that perspective. You got to get a piece of paper to justify it, all that stuff. Okay, let's take one last look at the equity markets, and then we'll be done for today. Thank you 600 people again for being here. Again, 100-degree fever doing the market open. Excuse me for my voice. A lot of mucus stuck in my throats. But we got to open the markets because I've just missed the markets. The markets have been gone for 4 days, and now they're back. NVIDIA 494, AMD 142, Intel 49, SoFi 983, Palantir 1761. Palantir actually rallying a little bit today, up 1.15%. So seeing some momentum there. Google 143, Google 52-week high, Tesla 254, Robinhood 1301, Amazon 153, Meta 355, Microsoft 375. Everything's green. Very few stocks are red. Like Elf is red a little bit. Warner Brothers is red. Hut 8 Mining is red. The Bitcoin stocks are red. Bitcoin at 42,600. So we're seeing some Bitcoin companies red. PayPal is even green, 62. NASDAQ 15,046. QQQ 409. QQQ just below the 52-week high. And then Square at 78. It's just going to be really interesting to see going into 2024. Can the QQQ break out to 420 and 450 and just keep going higher and higher, or when do we get the pullback? Because we have not gotten the pullback yet. It has not happened on the S&P or the QQQ. It's been almost 8 consecutive weeks of either new highs or just pure momentum. So when that first pullback does happen, it is going to be really interesting to see how the market reacts and if it causes a cascading effect. But remember, when that first pullback does happen, there's a crap ton of money on the sidelines waiting to buy into a dip. And they would much rather buy the S&P at 450 than at 474. So if we do get a dip, I think there's going to be a lot of dip buyers ready to capitalize on that momentum. Palantir now at 1756, Robinhood 1304, Palantir 1756, up 0.82% on the day. All right, not bad at all. Let's do word of the day, and then we will end it out for today. I hope everyone had a great Christmas as well. Had a good holidays. I was sick yesterday, so really my Christmas was just stuck in bed, didn't get to do much. But I hope everyone had a good holiday season, got to spend some time with their family, got to enjoy the break, and got to, eat some good food and enjoy with their family. Word of the day is grand family.
Grand family.
A family in which one or
grand family.
A family in which one or more children live with and are raised by their grandparent or grandparents. I didn't know that. So if your grandparents raise you, you're living in a grand family. That's okay. That's an interesting word of the day. Didn't expect to see that one. Grand family. If you live with your grandparents and they raise you, then that's what it is. Let's do another one. Another one is chapfallen.
Chapfallen.
Chapfallen is a synonym of depressed. That means cast down in spirit. It can also mean having the lower jaw hanging loosely. Gina was chapfallen when she learned that her best friend's visit would have to be postponed. This is an interesting word. This just means like surprised or like shocked. So chapfallen. I never heard of that word. Chapfallen. It means your jaw has fallen down. Chapfallen. Interesting. Chapfallen. Let's do one more word. Let's do 3 of the day. Word of the day is tedious. I think we know this one. Tedious just means boring or too slow. All right, so we got grand family, chapfallen, and tedious on the word of the day today. Not too bad. Chapfallen when markets open. Yeah, we need to have some interesting days. Makes it sound elitist grand family. Amit, heard you were going to get jacked and work out harder next year. You should get into MMA. You'll learn a skill and get a great workout. Look, I've been thinking about MMA a lot. I haven't never pulled the trigger on getting into classes for that or anything, but kickboxing, MMA, that stuff's super interesting. And I'm definitely interested in trying to get into it. I think that's a great way to lose weight and just like get ripped as well. So let's see what happens. Chap falling at Solana mooning. Yeah, Solana had a hell of a run. Again, I think we're going to see some downside pressure on Solana because I don't know if you can get to 150 when you're at 70 or 110 when you're at 70 that quickly, but we'll see what happens. Oh, Robinhood's at 1310. Oh, wow. Robinhood 1313 breaking out a little bit. Not bad. SoFi 990. Robinhood 1312 up 1.3%, breaking out a little bit, and Palantir at 1760. All right. That's it for me, folks. We'll probably get a daily Palantir episode later today. Finance Junkies will be back 9 p.m. Eastern, last week of trading for 2023. And we'll keep it going from there. Thank you, everybody, for joining. I appreciate you guys, and we will see you later today and back tomorrow, 8:45 a.m. on the Market Open. Bye, everyone. Have a great day. Hope you guys had a great Christmas. See you guys tomorrow morning. Bye-bye.